Hi traders and welcome to Pepperstone's Technical Analysis Market Wrap on Friday the 28th of August. So we've seen a pretty flat sort of market the last few days. A lot of the majors have been pretty much flatlining. The moving averages are catching up to a lot of the price action. Jerome Powell's speech last night did move the market for a split second, but it pretty much ended up exactly where it was before it started. So there are some scalping opportunities that we'll dive straight into, and we'll see if we can identify some good support and resistance to sell and buy off. So we'll start out on the Aussie USD. The daily chart's showing the exact same story that we saw last week. In fact, if we actually line them up side by side, the market was exactly where it was last Friday, sitting on the 20. It moved up to the area we thought it might, which is around that sort of 72 and a half cents or 72.50. It's done the exact same thing. You can see here, started out on the Monday on the 20 moving average, basically gone up and tested the highs that we had over here. So really good trading on this one. I know a lot of people got involved in this one, which is good because it's been a very straightforward trade, the Aussie USD. Good to see it playing the game. Yeah, look, it finds itself at the resistance point. Like I said, it's not going to be, it's going to be a tough job to actually break this. There's no question about that. It's going to need some sort of momentum that is probably external to just the normal market forces. So I would be really not anticipating the break, but more so probably trading it back to the 20 unless we get a clear-cut break above this level. It certainly gave it a crack through the speech, but it pulled back just like all of the other majors did as well. So yeah. With this one, you probably want to be trading the same pattern that we've been doing, running it back to the 20 moving average on the daily. We can take it to a smaller time frame, and you can see what happened during the speech here. It's a little bit more clear, but these are definitely equal highs. It's not really losing momentum up here. Like you can see, the MACD is not really falling, so we're not really seeing any divergence. It's just that it's having a great deal of difficulty getting past it. It's certainly getting up there on reasonable momentum. So until that changes, until we get a close above this level on the daily, probably trade it back into the 20 on the daily chart, which is around that probably 71.80, which is still a reasonable pullback. Like you're still talking about 80 pips, so it's still a pretty reasonable movement, but still definitely in scalping mode on the Aussie USD. All right, we'll jump into the US dollar Swissy. This one is really painting the same picture as the dollar index. We'll look at that one next, and it's almost identical when you look at where it's at. Definitely found a pretty strong level of support now. There's no question about that. You can see, for several weeks, we've been pretty much in this zone, trying to push past the 20 moving average. It's holding it at bay, completely and utterly stopping it in its tracks. But it's not selling off it like it was, and I think that's probably the important part that we have to take from this, that prior to this little consolidation area here, this was just selling off every time it touched a 20, even as recently as the start of August. But now, as it's, you can see here, the last 5 or 6 days of trading, it's basically maintained a zone between the 90-30 area and around the 91-18, so about an 80 pip sort of zone, 80 to 90 pip zone. It's been able to maintain it, has not been able to break down, which is a good sign for it because it's obviously showing that the support level is holding. So obviously what we want to see here, it's difficult to trade. You've got to go to a really small time frame to probably get involved in this one, and even then you go to a 15-minute chart and all you see is mess. So it's really, this is probably more a longer term. I wouldn't even be scalping this one. It's just a wait and see until it breaks a daily close above the 20 moving average. Until that happens, this is just a no-go zone. It's got good things going for it though. The MACD is definitely rising. There's no worries about that. And you can see here that the stochastics right in the middle. So it's certainly, preempting what could be a good push up, but it's going to rely on obviously the dollar index and a couple of external factors. But this is just one you don't touch until it breaks above the 20. Difficult to short it as well because obviously this level's starting to hold now. So unless we get a break and close below this level, around, well, basically at least below the 89, probably 80 area, you wouldn't be trying to short this. You'd be preferring the long. The long trade is the better one because the technicals are in its favor and the indicators are in its favor. So a break above the 91.40 on a daily chart. It has to be a daily candle, though. It's got to be a significant break to make this one worthwhile. All right, we'll go to the dollar index, and it almost looks identical. Like I said, it looks exactly the same as the Swissy did. Now, same rules apply to this one, actually. Like you can see here that it's been, the last 5 or 6 days have been in this zone. Hasn't had a really big long-range candle at all. Like it's been, basically up and down. what we want to look for, and I've said it, I'm nearly almost tired of repeating myself, but it's what we have to do. We have to wait for a daily close above the 20 moving average. Until that happens, this is just not tradable. To short it, it's got to close below the 91.90 area on a daily chart. Doesn't look like it's doing that, or it doesn't look like it wants to do that, because really, the last 2 weeks have failed to create that move. And also you can see here that it's touched the 20 on every day this week. Okay, so this is the daily chart. Every candle this week has some interaction with the 20 moving average. You're really showing you how strong it actually is. It has to close above it. And when it does, it will be significant, because it means that we're going to have the series of higher highs and higher lows that we're always looking for. We're going to have that lightning bolt effect, which is basically going to give us a change of trend on the daily at a really important support zone. Okay, MACD is rising again, so that's obviously a good thing. Stochastic is not as in the middle as it was on the Swissy, but certainly could turn up and push into the overbought, which is obviously what we want to see if it does break the 20. So this trade, is very heavily, I guess the other USD based pairs are very reliant on this trade closing above the 20. We need a candle close above the 20, and it's going to open up an extraordinary amount of trading opportunities on several pairs. None the least is the Swissy and also the US dollar CAD to a lesser extent at the moment. All right, we'll have a look at the euro and the pound pairs. You can see this one here you can see the effect of the speech last night. Hasn't done a lot this week. It's been really a whole lot of nothing. The 20 is proving to be a stumbling block to stop it from going down, and that 119 area that we talked about last week has stopped it from going any further. So yeah, it's one of those ones where it's scalping only, although it doesn't look like it's moving a lot. That is, from top to bottom, it's about 120 odd pips, I think. It's like the bottom here is around that sort of 1750, and all the way up to the sort of that 119. So it's a reasonable amount of area to actually look. I mean, you go to the 1 hour and it doesn't really show you a hell of a lot, but that's no surprise really, because obviously the anticipation of Jerome Powell talking has caused pretty much a flatlining effect on the moving averages on most of the time frames. But you can see prior to that the moves were pretty reasonable, and you were getting a decent amount of pips out of it. This is a 1 hour chart, so I would expect that the 1 hour has got to break above this 200 moving average in the first instance, and then you could long it to the 119. Okay, so it's a scalp. It's only about 40 or 50 pips. That's all you can do here. We've talked about this a little while now. You're going to trade it within the range. You've got to either take it long to the 119 or take it down to the 117, depending on which way it breaks. Both of them are as good as each other. I probably prefer the long, mainly because the 20 moving average is right in its face if it has to go to the short. For it to go down to the 117, it's got to break the daily 20 moving average, which we know is significant because it's held it up for the last week and several times in the past. You can see right through here as well. So, the easier trade, the one with least amount of resistance, is definitely up to the 119. But, that said, if the daily breaks below the 20, the 117 is going to be your target. All right, we'll go on to the pound USD, same story here, very low movement ranges. You can see the low of 130 sort of 48, high of 132.60. So it doesn't look like a lot, but it's still 150 to 200 pips movement if you capture the smaller moves inside it, which are definitely there. You can see the higher highs and higher lows on the 1 hour sequences, which are pretty good. It's been pretty ordinary the last day of trading. You can see that, but that goes for basically every major pair. You can see the speech again, a very big whole lot of nothing really. I mean, it went up, it went down, and ended up exactly where it started. So no surprises there. You can see that it's pushing or trying to push past this really important zone. Okay, this resistance zone at around that sort of 132. It's pretty much 132 flat. I'll just move it right up there. It's 132 flat. That's the zone. Having a lot of trouble breaking past it. If it does, it's got a lot of blue sky in front of it, but it is failing to do so. You can see it had a reasonable crack throughout the speech, but it's pulled all the way back down. The 20 moving average is holding steady here as well. So you're obviously getting less range on the bottom now because the 20 moving average is increasing up. So the way you want to play this one is take it to a smaller time frame and probably, see what the market's telling you. I mean, at the end of the day, if we get a break below this level here, we want to see a 1 hour break below here, then you can probably short it to this zone here around the 130.60 again. But if it does happen to break higher, the blue sky is very, very important. So now what is important is actually not just waiting for a 1 hour break on this level. So people get a little bit confused and they take a 1 hour break above this level and say, okay, we're ready to go. You really want to see, especially when it's a significant resistance zone like this one is, it's got to be a daily close and a pretty reasonable one at that, okay? It would want to be closing above the 133 for mine before I take this trade seriously, because this is a very strong resistance area and you want to see a break above that on a daily and a close. So the daily candle has to close above the 133 before you start longing this any further. Other than that, you're just trading and scalping the zones. So it's a pretty easy trade when you are only scalping it, but there's still no long-term plans on this one until we get a significant close above that level. And that significant close has to come on the daily chart. All right, the pound dot is the next one that we will look at. It is at critical points at the moment, this one. It's been really good for us over the last few weeks. You can see the trading has been really good, but it's at a point now where, this is a daily chart. It's a pretty significant zone for it. You'll see on a 4 hour probably just how significant it actually is. I'll move it all the way up. And obviously at the 200 on the 4 hour, which is, pretty reasonable, but just as importantly, you can see that it's at a very strong support zone. Okay, you can see that it was very, very strong support right through here. It's bounced a little bit off that now. It's bounced off the 20. I don't like that the MACD is starting to fall on this one, but that coincides with the moving averages. The cross of the moving averages, the fastest cross the slow now to the downside, which doesn't bode well for it. I don't like that it's below the moving averages now, because it has been a really good, easy scalp up several times over the last month and a half. It's got a little bit of work to do now, though. It has, the last 2 days has seen it drop below the moving averages, which is not ideal, but it is still obviously at a very strong level of support. So if it does happen to, get its mojo going again and breaks above the moving averages, and by that it needs to get up above the 182 sort of 60 area, then it's good for the long again. Then you'd see it will definitely open up to at least the 184, and a break of that, well, that's going to take us all the way to the 200. So we'll be really keen on seeing that play out. But it's got a little bit of work to do now. It needs to get a change of trend on the, probably 4 hour at the very least to even get up there. So we want to see a series of higher highs and higher lows to get up to this range here to around that 182 area. And once it does that, it'll be above the moving averages and we should be all set. But look, the pound still looks better than the Aussie does against the USD pairs. So there is a chance that this can happen. They're both at very strong resistance. And I think that the pound's resistance is probably the more likely to break. And if it does break before the Aussies does, it's going to bode well for the long on this particular pair. So we've got a lot of flat movement. Yeah, look, the S&P 500 is obviously hitting new highs. I'm not even going to bother looking at that because it's not really any different to what it was last week. But, while it's the only one really moving, it's the one making new highs. Everything else is flatlining. So we've just, when they are flatlining like this, we draw up the zones, trade between the support and resistance zones that are very clear, and you're going to get some really good scalping opportunities. But this is not the time to be setting long-term plans. It's all about the short scalps, going for your 30 to 60 or even in some of these more exotic pairs, 80 to 100 pip scalps. And the ranges are big enough for you to be able to do that. So concentrate on the support and resistance zones that we talked about and just trade in between them. So I hope everybody's had a great week's trading. We've had some good scalping opportunities, even though it's been flat. So hopefully you've been able to take advantage of some of that. And hopefully the market will start to open up for us next week, leading into non-farm payrolls. Have a great weekend, everyone.